Hi Pranit, and welcome to the channel.
Hi, and thanks for giving me this opportunity to come as a speaker over here.
In today's episode, Pranit is here to share the tips on stock market, investing, and a lot of different other things related to finance. You run a podcast regarding the entire stock market and finance stuff, right?
Okay, so about the podcast, I'm currently running it on Cleanify. You can come at 10 p.m. on Mondays in the Cleanify server on the stage and can interact with me.
So let's begin with the very first and the basic question. According to you, what exactly is stock market?
Okay, to understand stock market, first of all, you must know what is a stock. So a stock or a share is basically a part ownership of the company. When you buy a stock, you basically become a small owner of that company. You have some small percentage of ownership in the company's business. So accordingly, as the company's performance, you will gain as the performance increases. Your stock price will also increase, and the company also gives dividends or bonuses based on the company's performance and growth. So that is basically a stock, and the marketplace where all these stocks are purchased and sold is the stock market in simple terms.
All right, that's actually a great explanation. Like you become basically a part of the company and you become a shareholder of the company, right?
Exactly.
Yeah, okay. So actually, nowadays, or particularly, I would say that after that series of Scam 1992, right? There is a lot of hype that has occurred in youngsters about investment and stuff, right? So, what do you think about that?
Yeah, most of the percentage that was in the demat account, the increase in percentage during this lockdown period, as well as after the release of that particular web series, Scam 1922, just drastically increased. So that put a great impact in the youngsters of India, and they are currently pursuing the right path in the stock market. They are basically shifting from the banks, FDs, and bonds like those things to the stock market.
Yeah, exactly. What I really think is that, before the series or before the entire, stock market stuff, there was a lack of knowledge among a lot of people. Like from our parents' side, they the only way of investment they know is a kind of FD, or very little amount of people have the knowledge of stock market, right?
Yeah. So basically, this web series somewhat motivated our youngsters to research more and know more about these financial markets, and that was a good step by the creators of the series, and
Yeah.
helped the youngsters of India a lot.
Yeah. Okay. So the second thing is that why do you think someone should invest in, and that too starting from a very young age?
So basically, see, when you go to the banks, you have savings account, fixed deposits. In savings account, you get somewhat interest near to 4% or 5%, and in FDs, you get the same interest like around 6%. But when you see the performance of the stocks, or you take example of Sensex. Sensex is basically the list of top 30 companies that are listed in the Bombay Stock Exchange. So about the stock exchanges, actually there are two major stock exchanges in India. There is the National Stock Exchange (NSE) and the Bombay Stock Exchange, that is the BSE. So Sensex, I was talking about Sensex. In 1980, it was around 129 points, and at present, if you see the price of Sensex, it is at 52,000 points. Within a period of 40 years, it had given some return around 400x or something like that. So a drastic increase in the Sensex was seen in the past years, and not only Sensex, the companies like Wipro, Infosys, all these companies actually performed really well, and you could have gained a much heavier amount by investing just a small amount. You must have heard about the Wipro case, that if you had invested 10,000 rupees in Wipro in 1980s, you would
Yeah,
have
yeah.
something around 1,000 crores in your pocket now. So these are the cases which somewhat motivate the people to get into the stock market, and is in some way correct. But one thing one must remember, that having proper knowledge and proper research on the companies before purchasing them is a good option to pursue.
Yeah, actually, I got to know about this. I heard somewhere the news that one woman bought a stock or share from Amazon, and as of 2021, that one single share of Amazon worth like billions of dollars. So because of that, she was able to buy some
Yeah.
houses for herself, and basically their life got drastically changed after that, right? So this is how, if you just invest good amount of money into some or the other company, then it is going to give you good returns.
Yeah, but this is just one case where you see the only greener part. The
Yeah, yeah,
dark part of this is where a lot of companies in the stock exchanges have gone bankrupt. Like you
bankruptcy.
take the case of Arcom or any groups of companies of Anil Ambani. They went from 300, 400 rupees to 3, 4 rupees. So this
Yeah, yeah,
was the
yeah.
darker
That's
side of the stock market, which one must not ignore. So
yeah,
these
yeah.
things also happen in the stock market. So taking proper risks, like calculated risk, is a must in the stock market. Getting into this bait, like you will get crores of rupees by just investing this small amount in these companies, is not an ideal option. One must look on to the fundamentals of the companies as well as the like the business models as well.
Yeah, yeah, yeah. So, according to you, what are the some important, key points or terms that one should look after or into a company before investing?
Okay, so the most important thing that I feel that one must look up to is the business model of the company. If you like the business model and you see that there is a potential in the company that will like it will grow in some in the coming years, then it must be a good option. But you must also see that if you are a consumer, will you buy that product of the company, or are there greater competitors in the market who you would prefer? Then you must look on to like business model is not the only thing. You must also look on to there is something called balance sheet of the company,
Yeah, yeah,
where
yeah.
you see all the figures of the company, like the price to earning ratio, price to book value, and the results of the companies quarterly, yearly, and many more things. So looking up to those things and the year-wise performance, how the company's performance is increasing, and what return on equity the company is giving in the past few years, and having these researches. See, like I'm saying this, it may sound really easy, but studying these fundamentals and doing a proper research itself takes a lot of time and experience. So having all these and giving proper time and studying hard would give you a good success rate in choosing the company.
Yeah. So, as you told that it requires a lot of research and a lot of hard work. So, even when you started out with the stock market, so did you take any sort of help from some courses or books, or what would be the recommendation from your side?
So when I was starting, basically I was searching through YouTube, as almost all of us do for learning any stuff. So I was going through a hell lot of YouTube videos. I watched some YouTube channels like Well Saga, C. Rachna Ranade, all
Yeah,
over
yeah.
the all over day and night, and somewhat started day trading. And I also got into the trap of taking some tips from some scamsters. I'll explain you that within a moment. Like there are some scams happening in the stock market where most of the traders or the beginners get trapped. So I'll tell you about the scam. Basically, let me tell you. So what happens when the new traders come in the stock market? They first of all look here and there for some tips and tricks for learning about the stock, for buying or selling a particular stock. So there is a social media platform called Telegram, which all of you must know. So what happens over there? A lot of channels are running, which actually provide tips. So that is a major drawback of the newbies who come into the stock market. They rely on those tips from the Telegram, I mean the channel runners, and they take trades on their basis and come out on losses at the end of the trades, because most of them are basically scamsters. They are not very much experienced and telling you to take these trades just for the sake of earning money by giving you some premium subscription or sort of things like those. You must not like go for those premium subscriptions unless and until you know how knowledgeable is that person, or if the person is SEBI registered analyst or not, because SEBI registration is a benchmark view which you must rely upon to getting ahead for getting ahead on the tips or calls for some traders. And apart from that, only registration is not sufficient. You must also know how the trader is performing. Is he a real trader or not? Is he showing you the actual PNL or not? Basically, most of the social media is filled with the screenshots of profits and profits only, because they do not show the losses, which are an integral part of the stock market. Coming to a particular scam, let me tell you one thing that happens with most of the newbies in the stock market. Like, you get when you open a demat account, they generally sell your number. This happens with all of the demat accounts, be it the biggest ones or the smallest ones. So the tips providers approach you through messages or calls. So I'll tell you what they basically do is, suppose they get 100 leads, like 100 customers. Now they segregate 50 and 50. To the first 50, they give the buy call on a particular stock, say Reliance. They give a buy call. And on the second 50, they give a sell call. So what happens, that they give both the calls, and after a few moments, something will happen. Either the price will increase or decrease.
Mhm.
So suppose the price increases. Now what happens? The first 50 who were given the buy call became profitable, and the second 50 came in loss. Now
Exactly.
those profitable traders think that this is running, and now they repeat the same task with the first 50. They segregate them into 25 and 25, and give 25 buy calls and give 25 sell calls, and this continues. And like, there will be at large there will be, suppose, six left, like segregated into six and six, where six will be very assured that this particular tip provider is giving me great calls and I must subscribe to these premium services, and they eventually subscribe and pay them heavy amounts in sake of earning. But actually that was a scam running around, and as soon as they subscribe, they will all I mean, they'll be facing losses, obviously, because this was not a particular analysis. This was just
Exactly.
a probability of buy and they'll be giving. So eventually they'll come out in losses and somehow quit stock market. So this is in some way, the stock markets, the reputation of the stock markets has been downgraded if you see the generation previous to us.
Yeah, yeah, exactly. I mean,
So
this
I
was shocking.
briefed about that particular scam that was happening.
Yeah, I mean, I wasn't really aware of
That's
this. I mean, this kind of scam. Actually,
Yeah, because all the newbies, I think that all the newbies out there must know about this particular trap and
yeah,
must not get into this trap. So knowing this was
yeah,
extremely
yeah.
important.
Yeah, actually, there's a very famous phrase in this term, like do your own research before investing into a company, right?
Yeah,
So that
having
is
your
very
own research is a must.
must
See, what
exactly,
the new traders think, that somebody is providing tips. He must be more experienced than me. So in
exactly,
that thinking, they take the tips, but you never know whether he's a scamster or a real trader. So you
exactly.
must always rely on your own research.
Yeah, that is very important. I mean, yeah. So you are actually
Yeah.
bursting a lot of inside things,
Yeah,
like
these are
these
actually
are
very
the
common when you get to a stage of experience through the stock market.
yeah, yeah. I mean, that was really an important part. So, like, when we talk about these investments, so as per the newbie, like for a new person who is actually entering into the stock markets, what are the possible tools that could really help him out? Because, going through individual company is kind of a very tough task for a person who is very new to it. Right. So, what tools and stuff that you would like to recommend to the viewers?
See, before investing in particular companies, first of all, I like to segregate two parts. First is investing, and the other is trading.
Trading, yeah.
Investing is when you are interested in the company's business for somewhat mid-term or long term. When you come to trading, you take it for few days or even few hours, or like those are intraday trades that are done within within a day, and or you may trade on a particular week. So that is trading. And the other thing that I told was investing, where you invest in a particular business. So as far as investment is concerned, so looking to the like what resources you must look onto. So the very first resource is searching for companies with proper like fundamentals. So before that, you must learn fundamental analysis. For fundamental analysis, I would recommend a very good channel, that is Pranjal Kamra. You must have heard about this. He's a big YouTuber with, I think 2-3 million subscribers.
Yeah, yeah,
So
yeah.
you can refer to that for fundamentals. Like you'll learn a lot of fundamentals from there, and then you can choose on to which companies are apt according to my fundamental logics. And there is a website called screener.in, where you can look on to there is a condition like P should be around 20 or low, which is not always valid. This is for small companies. Like you want to segregate few companies with good value, then P should be low. But when you look on to big companies like HDFC, HDFC Life, these companies have high P, but still they are valuable. So, like when you get into a particular fundamental set, you know the fundamentals of the companies. You can segregate them on the basis of screener.in. You can search for the conditions. Like screener.in basically gives you to run a query like P should be lesser than 20, the return on equity should be greater than this percentage, or the profits of the company should be greater than this, the capitalization, market capitalization should be this. So these are some conditions which you must look on to. And telling these only in just one video would not do justice to this whole fundamental analysis, because this is a whole subject which needs a lot of time to study and go through.
Thank you so much, Pranit, for joining us. And could you just
Yeah,
tell